This episode, as with all episodes, exists thanks to the supporters of the show who contribute a mere $3 per month via patreon.com/copytradersclub. You can too. It takes 2 minutes to sign up and you probably won't feel it. What you will feel is a warm, fuzzy feeling of helping out a little independent podcaster who creates a show you enjoy and get value from. Patreon.com/copytradersclub. Thanks for listening and thanks for your support. Copytraders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin Macaulay, my name and username on eToro. Today is a day for a returning hero. It's a good job the guest is such a star, because the host isn't feeling too hot. Anyway, here we go. Season 2, Episode 24 of the Copytraders Club podcast, and as always, my aim as an eToro enthusiast is to demystify this new and uncharted world of copy trading, understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. In chats like today's, the aim is to answer all your questions about this popular investor, and reveal more about them than anywhere else, so you can assess whether they might suit you. Having said that, it's Jaynemesis, and he's still copy blocked. But back today as the first ever popular investor guest to have a second solo episode. Jay, hello. Welcome back to Copytraders Club.
Thank you for inviting me back, Kevin.
Well, it's wonderful to have you back. And because you've been on the show as a solo participant already, and this is your second time as a solo participant, there's no need to go through security protocol. You've got a pass straight into the VIP lounge.
First name basis with reception.
Shall we?
Yes, let's.
All right, Jay, you're back in the lounge. How's it going?
Well, I mean, on the surface of it, quite terribly this year. But for me personally, pretty okay, apart from the extremely hot temperatures in the UK at the moment.
Yes, you're experiencing a bit of a heat wave.
Yeah, they're expecting tomorrow to be the record temperatures in the UK, possibly 40 degrees, maybe even higher. And actually, it's across most of the UK as well. Like the red warning. It's the first time I think the Met Office has given a red warning for weather in the UK, for heat, I should say. And it stretches all the way from Manchester down to like the southeast coast and the south coast, pretty much. So it's basically all of England that is in a red warning.
Well, if history is anything to go by, I'm pretty sure Northern Ireland is still ball freezing.
You are pretty much the only region that's missing out. Everyone else is setting new records, but Northern Ireland seems like it's kind of just chilling.
Literally. That's why I no longer live there. Well, I'm feeling a bit rough, I have to tell you. I've got the virus.
Oh, no.
Yeah. Did a test yesterday after several days of feeling increasingly poorly. My son came back with a cold from school, which my wife got. And then I assumed I just followed on from that. But after a couple of days of accusations of man flu, I'm now being accused of not having taken it seriously enough initially. So you can't win.
Oh dear. Comes for everyone eventually, doesn't it?
Looks like it. Yeah, so if I'm a bit flat today, Jay, you're going to have to up your game, up the energy levels.
Amp it up, yeah? Is that why you called the call Jam Master J? Is that why?
Absolutely. Okay, so I thought we might structure some of this chat through things that you said the first time around. There's no point in going through the same process as I do with the first time guest. So this is much more free-flowing. At times, that will mean mixing in a bit of hindsight bias, making some of your declarations from last time around look not too clever, but not always. But at least that provides us a bit of continuity, building on what went before. Are you happy to proceed with that?
Yeah, of course.
Okay, so I listened to your previous appearance, which was divided into 2 episodes, but I listened to them both the other day. And I thought we'd start with one of your quotes, which was that it's a bit odd when someone treats me like some sort of a deity, because I still remember going through the ranks and thinking I would never reach those heights, you said. So I wonder whether that, in the light of the recent PI meetup, inspires any interesting thoughts in your mind.
I think I've moved down a tier from Deity in most people's minds, which I'm somewhat thankful for. It was still kind of surreal. Again, a lot of popular investors, especially a lot of the kind of cadets and champion popular investors, were really keen on meeting me and taking selfies and stuff. You know, it was kind of, at first I wasn't sure if it was going to happen, and maybe, you know, that kind of tidal wave of kind of celebrity around me had passed. But yeah, after one person took a selfie, there a kind of a queue formed for a little bit. But yeah, no, it was an amazing event, to be honest. I really, really enjoyed it, and meeting everyone and talking to everyone, giving people advice, and learning from other popular investors as well. It's really, really good experience.
And so were you posing for selfies throughout the day?
Not really. It was more a case of, you know, people either when they first saw me asked for a selfie, or they asked before they left. So like at the end of the day, it was kind of a bit manic. Yeah.
Some little cadet, I'm going to pluck up the courage. I'm just going to go up and ask him. I'm just going to go up and ask him. It's time to leave. I know. Okay, I'm going now. I'm going.
Pretty much.
That's kind of sweet, though, isn't it?
Yeah, yeah. To be honest, you know, it was really cool to see so many cadets and champions as well in a weird sort of way, because it was a bit of a trip down memory lane in many ways. I still remember the people that were at the top of the leaderboard back when I was, you know, kind of champion and rising up through the ranks. And I always saw them as somewhat of a, you know, kind of celebrity figure, and always thought that they were so much more advanced than me or whatever. But yeah, as time moves on, you know, things change. And the other really cool thing was to see quite a few people that used to copy me, who have become popular investors as well. And have kind of learned through copying me and through their own trades, and other popular investors as well, I imagine. But yeah, seeing them rise up through the ranks as well has been really cool.
And how about meeting other big names, seeing them in the flesh? That must have been quite a trip.
Yeah, I mean, I've met, certainly, you know, Wesley and Heloise I've seen several times. I've seen Yeppe and a few others before as well. It was good to meet Robert Merck. I have a lot of respect for him. I think he's one of and fund manager Zach as well. I think those two really were two of the people I was most keen on meeting, because I really like their kind of take on the macro side of investing. So I feel like I could learn quite a lot from them. Yeah, I mean, there were a lot of great people. Some people surprised me a bit. Beechun Lee, I think his name is. He was a really, really insightful guy as well. So yeah, there were quite a few people that I really enjoyed talking to. Even people like Mr. G as well. I used to talk to him quite regularly. Haven't spoken to him as much in the past year or so, but we spent quite a lot of time talking at the event as well.
And did you have to give any speeches or do anything formal?
I was on a panel at the start. So they had a group of elite pro popular investors. It was myself, fund manager Zach, Wesley, and Heloise. I don't think there was anyone else. If there was, I'm going to feel really bad about it, about forgetting them. But yeah, so there was a panel, I think it was maybe 30, 40 minutes long, something like that. And it was mainly questions around, like, you know, how to kind of grow your profile and the marketing side, and keeping calm under pressure and all of those sorts of things. But yeah, that was quite fun.
Well, they had people like Robert spoke, didn't he, about marketing himself and choosing the
Yeah.
name Popular Investor and things. Neja spoke about using Instagram, I understand.
Yep.
Who else spoke about marketing themselves?
Yeppe talked about LinkedIn as well. Actually, Yeppe, I think, gave two. I'm not sure if he did it at the same time or not, or if he did it somewhere else, because there were a few that were on the main stage, but I distinctly remember him talking about marketing and stuff on one of the other stages earlier in the day. But yeah, I think it was basically just those three really that kind of did that stuff. I was asked if I wanted to present about Twitter, but I didn't have any context or anything, so I didn't know that everyone else is going to be presenting as well. And I thought, well, I don't want to come in like Mr. Big Shot telling everyone how to use Twitter. So I declined. And then at the event, I was like, okay, I probably should have done it in hindsight because everyone else is presenting on all of these other platforms. And then they were all like attacking Twitter as well, and I wasn't happy about that. So I wish I could have defended it more.
But I bet there was a part of you that was quite happy that there were other people there, sharing the load of that kind of stuff. Because I get the impression you used to be wheeled out on every occasion.
Yeah, I think I wouldn't say like completely. There've always been a few other people that eToro would use for PR things, but certainly in the UK, I was one that was wheeled out a lot, and anything to do with crypto, I was wheeled out a lot as well. Not everyone really wants to do that kind of stuff, so I think the fact that I was relatively comfortable doing it meant that eToro kind of became a little bit reliant on me for a while. But that's definitely changed now, and I think looking back, in some ways, I'm glad I didn't do it. Not just because it's nice to see other people kind of in the limelight a bit more, rather than just me. But also, I think it would have been hard to compete with some of their presentations, to be honest. I mean, they did a lot of research and really kind of drilled into some of the depths and the details of how to grow and market themselves.
Going back to the question I asked about rising through the ranks and popular investors that haven't been around for such a long time, a recent guest on the show, William Bishop, who's quite a newbie to eToro, but a very old hand at investing, was telling me you two shared a little moment, and your words of wisdom to him were that it simply takes time to get known as well. There's that element of it. The copiers just don't know you yet. You have to put in the time and build up your name recognition.
Yeah, it was probably the question I got asked the most, really, especially from lower tiers at the event, were people asking, how do you gain more copiers? How did you grow as big as you are? How did you get such a following? And realistically, the answer I gave them was like, these people need to be on a journey for you for a good amount of time to build that trust. You're always going to get people that join and then leave within a few months, or sometimes weeks, or maybe after a year. But really, it's only after people have been with you for 2 or 3 years even that they really start to build that trust, and they're like, okay, I can stop watching as much. I don't need to have a tight stop loss or whatever, and they feel like actually this person is managing the portfolio responsibly, and I can leave them to do their work for the most part. And yeah, it really does just take time. I think the majority of the people who are copying me now. I mean, I was at I think almost 46,000 copiers when I got copy blocked, and I'm down to 19,500 or so now. And I think really all of that kind of extra chunk there was inevitably going to leave me at some point, whether it was 6 months ago or now. They didn't do enough research before copying me, possibly, or didn't understand their risk appetite enough, or market conditions, or perhaps they had a goal in mind where they needed the funds. But there's always going to be that churn of people leaving. So really, it's just a case of building an audience that really just respects you, and also trying to target younger people in many ways as well, because they're the people that are going to be saving the longest. So if you can build those relationships with people, then that's probably the best way to do it, I think. Sorry, that was a long answer.
It's a good answer. And part of the churn, of course, is the mindset of copiers generally can be very short term, and My next question then is, do you think in time we'll see a genuine long-term buy and hold, no nonsense, pie in the sky companies, value investor like William at the top of the eToro tree? Or does it just not work like that?
I think it would take quite a lot for a real value investor like that to get to the very top. Because I think that there's always going to be, when you think about how these platforms kind of work, and even looking back through the history of eToro, there have been these waves of new users joining for various reasons. They may have been joining for, crypto back in 2017 kind of time. They may have been joining during the kind of 2020 era because of COVID, and stocks and things like the GameStop situation and Robinhood, or they could have been coming in for NFTs or whatever. There's obviously they're opening up to different countries and things like that as well. So you're always going to get these waves of new people joining, and they're always joining with their own kind of goals of what they want. Most people, I think, don't actually join eToro specifically for the copy trading feature. They just discover that when they're on there. So there's always going to be that kind of period where they're experimenting and stuff. And as you have these big waves, I think it's inevitable that you're going to see people throwing money behind whatever is the hot thing at the moment, the hot kind of sector or the hot thematic investment style.
Hope it's not transmissible down the microphone.
Me too. I've had it once.
What flavor did you have?
I had the OG flavor. I had it when so my 10th day of having it, which was back then like the day where you could stop quarantining in theory. Not that I was well enough to. Day 10 for me was the day that Boris came on the TV and told everyone that they had to stay inside in the UK and not go out. So very, very early. And yeah, that wasn't fun because both me and my girlfriend had it reasonably badly, and especially like the breathing and stuff. There was no vaccines or anything to dampen the blows back then. So,
wow. I was actually going to tell you by way of an investing-related crossword puzzle clue, which I completely forgot to. I was going to tell you that I had acquired an Irish memory chip maker and see if you could work that out.
No.
Name a memory chip maker.
Oh, I see where this is going, I think. An Irish memory chip maker. Are they really Irish, or are they Irish for taxation and banking?
If you add an Irish thing to the name of the memory chip maker, what would you add to that? What am I talking about? What's the answer?
Honestly, I have no idea. I'm so bad at these kind of things.
Omicron.
I don't even get it.
Omicron. No, I've got Omicron.
Oh my days. Oh my god, that shouldn't be a legal joke. Oh my days.
Okay, let's get back to business.
Okay, I feel like I need a minute. I need to stop smiling. I can't stop thinking about how painful that experience was.
Like, I'm a sick man. Don't kick me when I'm down. Okay.
Oh, my cheeks hurt.
That's what she said. Okay. So something you said on the previous episode was Futurism is what I'm all about. But what would you say to someone who says that really Futurism, without a grounding in the present, is really the bubble that has burst? Wouldn't you say?
Not really, no. To be honest, I think it's just shifted a bit.
Carry on.
So I think there's a difference between kind of growth sectors and futurism. Like, futurism is about much more kind of broad, sweeping changes that are likely to occur in the future. And so I think, there's always going to be things around economics and the kind of demographics of the population and the money flows into and out of various funds in different countries and things that are kind of dictating which of those areas are most investable. But realistically, I think most of the trends that people were investing in 2018 or 2015 or 2020 or this year are still valid and extremely likely to unfold in a path similar to what people are expecting, regardless of the fact that they may not be the best investments at the moment. And especially some specific companies. For example, I think, in 2018, I think was when really the kind of boom around some of the marijuana stocks started. And I still think that the marijuana stock boom is going to occur. Is it a good investment at the moment? Probably not amazing, although you could argue that actually it's far enough back that most people have somewhat forgotten about it now. And I do think actually not that long ago I was looking and someone had done quite a deep dive analysis on Aurora cannabis, I think, or whatever they're called. And they look reasonably attractive. And I think if you look back a few years ago as well, renewables were really, really down in the dumps. My solar and wind stocks were holding back my portfolio for the past 2 years. But this year, solar is one of the best performing sectors in terms of a subsector. So I think that these kind of trends are always there under the surface, but geopolitical events and the macroeconomics of the world around us kind of dictate the kind of growth spurts that happen in those areas as they're on that trajectory towards the future, I guess.
Yeah, speaking of renewables, I saw you on the recent Popular Investor Forum.
Yeah.
And you guys were all talking through the potential consequences of everything that's going on with Russian gas and what that might mean for Europe in time to come. One of the first knock-on effects will be the drive for energy independence in Europe. But yet the wind stocks like Ørsted and Vestas, is it?
Yes.
You were saying something about their order books are so full, they won't be able to make progress any faster than they can in getting rid of the workload that they currently have lined up or something. Can you go into that in a bit more detail?
Yeah, so I think if you go back a couple of quarters, really it was the end of last year and the first earnings of this year that the problem really kind of properly exposed itself. But even before that, we could see it actually emerging through most of 2021, which is that these companies have had such high demand even before the Russia situation started. And shipping and raw materials and things during 2021 were really kind of booming in terms of costs. They had filled up their order books and they had a really strong backlog. And the way it works is that essentially they're arranging these contracts for these big offshore wind farms or whatever, and setting the price. And then 3 years later they come to deliver it. And when it came around to them delivering on a lot of the contracts that they had arranged a long time before this, so potentially pre-COVID or that kind of early 2020, late 2019 kind of era, they had priced all of these contracts in a way that was not obviously expecting COVID, and then the big surge in demand for renewables that came from essentially just how much better renewables have become. And because the commodity prices had increased so much, like the steel and the concrete, for example, that they need to build the foundations and stuff, especially for onshore ones, the concrete is a big part of it. And then the rigs and things to take them out to sea had increased in price. So they could no longer actually sell them at a profit. They had eroded their margins because of the fact that they gave the price so much before when they were actually delivering it. So prices are actually kind of reversing in a lot of commodities at the moment. So in many ways, you could say that that's actually looking quite favorable for them. In terms of scaling, though, I think they were obviously then hit with a big kind of surge as the kind of going back out trend started and the reopening COVID plays, I guess you could say, and the demand for electricity started to go up again. And so because of that, their order book started to fill up. And then most of these companies are based in Europe. So most of the biggest wind companies in the world are based in Europe. GE is probably and some of the Chinese ones, obviously, are the only ones really that are substantial that aren't based in Europe. So yeah, it's tricky because when Russia happened, obviously they then got even more orders, and so they could be in that situation again potentially. It really depends on how they're pricing it. The good news is that they essentially control or can control to some extent the supply, and they certainly have a lot of demand. So they have actually got quite a lot of pricing power potentially as we kind of move into this era of all of these countries trying to rebuild their energy infrastructure.
And if the EU is going to come pressuring them to get on with it,
yeah,
and waving stacks of cash, subsidies and the like.
Yeah, and that's what we've actually seen in the US with solar, for example. So in the Q1 earnings calls for solar companies, pretty much the companies were just lining up to take shots at the government and say, you need to get rid of the tariffs with China because we can't meet demand. That was essentially what every single CEO was saying. It was really a pretty big deal. And so, yeah, it was kind of a similar situation there. I mean, I've been trying to get solar panels put on this house since before the Russian invasion happened because I recently moved house. And the demand is just through the roof. I'm still waiting to even get a date for when my panels will arrive. And installing them is another thing. And on top of that, in the UK, the DNOs, the people who are in charge of, the kind of grid in your area, essentially, they're basically saying no to most solar installations, residential solar installations now, because the grid isn't set up correctly to do it, or they need to upgrade the power supply directly to the house to 3-phase instead of single phase, for example. That's become incredibly common. So yeah, demand for these things is completely through the roof, which is a good problem to have as long as they can scale to address it. And I think really what the industry probably needs is for governments to kind of step in and help with that, and alleviate some of those issues. And I think that will happen.
You mentioned the going out again trend, which brings us nicely on to Peloton. I'm sure you're looking forward to talking about that.
Yeah. I knew it was coming.
Would you like to hear your quote from the last time?
Oh, I dread it. Yeah, go for it.
I'm 100% sure that this is the future, based on how I and other millennials like to exercise. And you also mentioned that you didn't think having Peloton as one of your largest positions was much of a risk.
Yeah.
So let's talk about perception and lessons learned, or what do you take from that whole story?
Maybe this is something you'll end up quoting back to me again in the future, but I pretty much stand by most of what I said, to be honest. I don't think it was massively outsized risk for the portfolio. In reality, I offloaded most of the shares when they had decreased by around 50% or so. So, I did lose a lot of my holding, but my holding was only around, I think, 8 or 9% at that kind of time. And that's when I offloaded most of it. So, losing 4% in the grand scheme of things, especially when I was already on a profitable year and such and had a good year the year before, I don't think is really that bad considering the opportunities that I saw there. And I also think that when you actually look at what happened with Peloton, it's not so much that the product failed, and it's not really even so much that the demand just completely disappeared. It's more that they couldn't execute to meet that demand correctly, and that they were really not managing their finances as well as they should have been. That's kind of my take on it. I still I still have my Peloton. In fact, I have a Peloton tread now as well, and I still use it all the time. And I still think that it is a trend that a lot of people like. Whether or not I was overzealous, yeah, probably I was. In hindsight, would I have put quite as much into it? Obviously not with hindsight, but again, I don't think that the that the trend was so much the problem as just the execution from that company specifically.
Okay, well, let's not dwell on the negatives for too long, because one trend that you did get right was you had reduced your exposure to crypto
Yeah.
over time, which now seems very wise. I saw you on that Popular Investor Forum cautioning that you don't think the worst is over.
Yeah.
Here we are around the 20,000 mark for Bitcoin, 21,000 today. What indicators would have to happen to encourage you to re-enter that sector in a meaningful way?
It's a difficult question, but I think realistically, you have to look at the correlation of cryptos with growth stocks, really, and with Fed rates for the most part. I do think that there are certainly some cryptos that are more overvalued than others. And, you could kind of look at the risk reward of investing now and say that I think actually, I don't know who it was on the forum, but someone actually said, I think that I'm not sure if we were recording or not, or if it made it into the final edit, but someone said that there's maybe, you could see 50% more downside on Bitcoin down to, let's say, 10K. But at the same time, in 12 to 24 months, you could probably see a 100% upside relatively easily. So the risk to reward for that trade isn't actually that bad. I think Bitcoin itself is actually going to struggle a bit, though, for a couple of reasons. I think, first of all, the ESG narrative and the usage of lots of power and lots of graphics cards mining Bitcoin is really falling out of favor now. And it has been for a while. And I've been, on the fence and kind of devil's advocate to myself, even on that topic, and wondering if I should even invest in it because of that. But I think that the time for that has really come now, and that really that situation is probably getting worse, not better, especially with the situation with Russia and things. I actually saw an article today about Sweden prioritizing steel production rather than mining, which obviously makes sense with power grids and with power getting more and more expensive, and Ethereum soon moving to proof of stake. You do have to wonder if Bitcoin is destined to stay at the top for so long. So I think for Bitcoin it's difficult. For Ethereum, I still think there's just so much utility around it and so much building around it. And I think actually, even if you look at the kind of crypto space overall and you look at what the good investments are in there, most of them I find are chains that are either built to support Ethereum or built or projects that are built on top of Ethereum. So I think Ethereum is still looking really, really pretty healthy, especially at the prices that it's at now. So in terms of what the signal would be, there is no real signal, I guess, but the sentiment for me is, I think, starting to get really bullish around Ethereum, just because of the utility hasn't gone away for what is possible with that chain, and the valuations have come down. So,
and hasn't it grown with the death, pretty much, of a bunch of other shite coins?
Yeah. Yeah. I mean, perhaps you could say that it's been hurt by NFTs a bit as well, just to kind of counteract that. But yeah, I think certainly the market is in a kind of consolidation phase now. And we saw this in 2018 as well. The projects that look after their bankroll and have a real sustainable business model and take themselves a bit more seriously tend to survive and come out in a much stronger position than those that are a bit more speculative and kind of relying on cheap money really to fund everything.
I haven't seen Tom West doing any videos about how much his NFT is worth recently. I imagine that's...
Yeah, I'm a little bit concerned for him, really, because he's a nice guy, but I think he did put quite a lot of money into those. And I actually remember he did a video about one project that I actually messaged him about and warned him on, that to me looked a bit Ponzi-like, to be honest. One of the DeFi things that he was into, and I checked it recently, and it had essentially gone to zero. So I'm hoping that he heeded my warning and didn't put too much in that. But yeah, it's a bit sad not seeing his videos. I like Tom and his videos. I just think they're quite joyful little experiences.
Yeah, sure. Much more joyful than some eToro commentators. Speaking of which, we'll just close the crypto chat with a direct quote from your last appearance. Bitcoin to 100,000 by the end of 2021. Okay, let's move on.
Yeah.
You also told me you were obsessed with Grand Designs, the TV show.
Yeah.
That's not being made anymore, is it? I don't see new episodes where I live anyway.
Well, they have kind of a spin-off series that was on. I think they actually had a normal series as well recently, but they had a spin-off one that's called Grand Designs The Street, which is like a housing estate that's actually not that far away from me. I've visited it. This is how much of a fan of the show I am. We've driven through that estate actually just to kind of peruse the houses that are being built there. But essentially, it's an estate where you just buy a plot and they let you build whatever you want. So it's a complete mishmash of houses all next to each other. And that was on last year. So I think they're still producing it. Although I'm fearful that Kevin MacLeod is starting to get quite old now. So I don't know what's going to happen with that program.
How are your book plans coming along?
They're not that simple, I guess. No plans really.
Well, because we did moot it last time, and I think you said someone was interested in doing it.
Yeah, but and they were, and they came back a few more times, but then it just kind of fizzled out. So I assume they found something more interesting to write about.
What could that possibly be?
I wonder, with the markets the way they are.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Speaking of books, as we were just now, have you listened yet to the audiobook Eat to Live, as we discussed last time around?
No. Honestly, I actually haven't. I think I might have listened to maybe 2 audiobooks fully since then. So I've just not really actually found that much time for reading things. I do own it, though. It's in my library.
Oh.
So not my physical library, in my Audible library. But yeah, it's on my list. Don't worry, Gavin. I will get around to it. I promise. You know me. You need to nudge me a few times for me to
Very good.
delve in.
Okay, and then the final thing I wanted to raise from the last time around was how you gave the kiss of death when we recorded last time at the end of June 2021 when asked to tip a PI for the top. Do you remember who you settled on?
I think I probably said Robert Merck, I would guess.
Well, he was sort of mentioned in the build-up to someone, and then you ended it by saying...
Oh, it could have been, it could have been a few people. It could have been Gasper maybe, or someone like that. Or the Portuguese guy. I don't know, there's a few people. Is it
Paulo Gabriel Sá, yes.
Yeah.
Who has since had a torrid time, even more than most. 11 out of 13 red months since you crowned him as one to watch, as the future king of eToro.
Yeah, it's a shame. He put in an awful lot of work as well, so I feel really bad for him because I know that he's, he really committed a lot to learning and improving. So it's a shame to see that. I think really it's just that his investment style has, obviously fallen massively out of favor. And I think unless you've got quite a lot of experience, it can be quite hard to kind of shift around that. Well,
it's not over for him yet. There's always time to come back.
Yeah.
Can we talk about somebody for whom it is very much over?
Yes, we can.
Or as he might say, voilà, c'est fini. Olivier Danvel.
Yeah.
He's now ceased all activity. Can we talk about him? Are you free to talk about him now that he's off the platform?
I think within reason, yeah. I probably can't properly, properly like dig in with knives or whatever. But
no, sure. Well, this podcast is never about attacking popular investors. It's about understanding them and understanding the system and eToro itself. And just the behaviors that you sometimes see and trying to make sense of them. So I don't think anyone saw that coming from Olivier. Really?
It was very odd, really, wasn't it? I mean, he made some really outlandish claims with the crypto thing.
Well, do you just want to explain what he did?
Yeah, so he basically created a bunch of content on his website and stuff, and started pointing people towards it, and a video as well, explaining it as well, talking about a new portfolio that he was going to open up, where he was planning to, I can't remember how much it started with and ended with. I think he was starting with like $100,000 or something, and he was planning to turn it into $1 billion, I think, and doing so through crypto. And he was suggesting that the time frame for this would be, measured in months, not years, really, which I think is just, crazy. And I think in hindsight, you look back now and, I don't know if anyone's checked to see if he's given any updates on that portfolio, but I can't imagine that it's gone well, to be honest.
Yeah, I mean, and one of the main rules of being a PI is to not promote other platforms. Fair enough. Or certainly you don't try and entice eToro users onto another platform.
Yeah.
And he must have known that, and yet that's blatantly what he was doing. He must have known that these actions were going to result in him leaving eToro, so he tried to take them with him.
Yeah, I don't know what he was thinking, really. I mean, we never know what was going on behind the scenes as well. So perhaps eToro were kind of pushing him in some way to change his portfolio and things due to some of the criticism that he was receiving before that, or asking for more explanation or something. So maybe he felt a bit more cornered and thought, right, let's just try and bring as many people with me as I can to something else. Maybe he knew that it was coming to an end, but that seems somewhat unlikely, to be honest. It's very, very strange behavior, because as you say, I think especially when you get higher up and things are a bit more serious, when you become like an elite or higher on eToro, the rules are pretty clear. You shouldn't really even need a rule for that. I would think it goes without saying somewhat. It's quite obvious that you wouldn't want to promote people to take their money away from a platform that's paying you a salary for looking after money on it, essentially, through copying. Very strange.
Okay, so we're living through a time where many of the top PIs have had difficulty maintaining their performance over the past 12 months, say, than they had in previous years. A question I see arising quite a lot from copiers now is, what the heck are these guys getting paid all this money for when this is the level of their performance? And it's usually asked in that kind of tone. Now, I was watching your quarterly call on Twitch, your live stream, and someone asked a question along those lines. And I was really surprised by your response, Jay, because you went into incredible detail, and your approach was, if you think you can ask that kind of question and you're not going to get full and complete disclosure from me, well, you're wrong, sunshine. Here it comes. I'm going to hit you with it. And you broke down your salary payments from what you could get paid if there wasn't a monthly cap, but there is a monthly cap. So this is the gross amount, followed by tax, followed by equipment expenses, things that you pay for in terms of website, graphics, video production, copywriting, 15 to 20 different services relating to analysis, office space, events, etc., plus, of course, Forex. And the number you came up with at the end also really surprised me, I have to say, because you're capped at 150,000 USD per month.
Yeah.
Yet the number you ended up saying is closer to reflecting your take-home pay was an annual £250,000.
Yeah.
Which, is still a healthy chunk of change, but it's not the millions that everyone assumes you're raking in.
Yeah. I mean, it depends, right? At the end of the day, I'm in the UK, and the UK does have a relatively high tax rate, globally speaking. I also am self-employed rather than running it through a business. So I can't just kind of keep the money in the business, as it were, to protect it somewhat from being taxed. And also, since then, or even a bit before then, actually, I have started to invest in some startups and things that actually help decrease the tax bill, essentially. So I kind of get to keep more of that money as long as those investments don't, go badly. But yeah, the gist of it was that it's not quite as much as everyone thinks. The thing I was really trying to get across was that I'm the person at the very top, right? So I think it's reasonably fair when my performance is poor to question how much I'm being paid and if it's too much. And even that 250, I think, is a number that people can debate and decide if they think that's worthwhile or not. But really the point was to kind of shine the light on the people below that, because I see when I was an elite, I was getting these questions as well. And I know that other people get these questions as well, even as far down as champion, where they're getting, really not very much at all compared to the amount of work that's involved in running their portfolio. So that was really what I was trying to highlight, is that there are going to be some people in the kind of elite tier who are working as hard as I am and have similar expenses to me and similar tax situation as me, who are really only going to be taking home, 40 or 50K a year potentially, which really isn't very much for, considering what they are actually doing, and potentially that they may have a background that could easily get them a job at, some Wall Street firm or bank in London or university economics kind of job or whatever. A lot of these people are really well qualified. So I think that was really what I was trying to get across. At the same time, though, on the flip side of it, a lot of the elite pro popular investors live in jurisdictions now that don't have such high taxes. And really, tax is the biggest chunk of it that disappears. So I know that Yepe has moved to Dubai. And to be fair to Yepe, in Yepe's defense, Yepe has probably the most expenses of anyone, I think. I know that he has a team of people behind him and supporting him, offices and all the rest, and he really does work hard. So I'm not in any way trying to, direct any fire at him. But yeah, there are some popular investors that live in countries like that to lower that burden. And then I think it's potentially more of a fair question. But I'd also point out that, since that Q&A as well, inflation has really kind of ramped up. And you could argue that not only, it's good that I'm being paid in US dollars and not pounds, to be fair, but the inflation is still very painful. We don't get a pay rise in line with inflation. So maybe I should ask eToro.
And just to add to the points that you made in your quarterly call, you also gave up business projects to focus on eToro. You have to study, take courses, and try and improve all the time.
Yeah.
And of course, ultimately, the copiers aren't paying for it. Your copiers are not paying you as their money manager. You're not their money manager. They're their money manager.
Exactly.
So the point you made is that your salary is being subsidized by users of eToro generally, people who don't even copy trade, including them. And if you compare it to what someone would have to pay for an active money manager or a financial advisor, it's way cheaper.
Yeah.
So there's a big difference between whether you should be getting paid what you're getting paid and the fact that they're not paying. So in a sense, they don't have locus standi to pose that question. You know what I mean?
Yeah. Yeah.
Because it's eToro that's paying you.
Yeah.
So what concern is it of a copier's?
I think realistically, especially with me, I think it's quite fair to question it, because I'm someone who's very outspoken on my politics about things like wealth concentration and things of that nature. I'm quite kind of socialist leaning, dare I say, which is probably a banned word in most of the space. Had some good debates about that at the event in London, actually. I do get it at the end of the day, because, these people are not generally the kind of people that will have been employing those services that you talked about. So they won't have been going to a private money manager in most cases, and they don't understand what those costs really are or what the expectations really are for those things. A lot of people have to learn that as part of their kind of journey through eToro. So I think it's inevitable that you're going to get these questions. And personally, I think that transparency is the best policy on this sorts of thing. I don't think that hiding your income or your tax situation or anything like that, or how much you're being paid, is a healthy thing to do, really, because it should be scrutinized by people. To be honest, even though they're not paying for it, it should still be scrutinized in the same way that I don't really directly pay for the contracts that the UK government hands out to various organizations to build infrastructure or whatever it is. But I still scrutinize it, and I still then try and hold them to account and say, this is too much or not fair or whatever. So it's kind of a loose comparison, but that's the way I kind of think about it.
Yeah, because in a sense, it's your money as a taxpayer that's being used for those contracts. But
it's kind of similar to eToro, though, because you could argue that eToro is kind of taking a tax, as it were, from all of the transactions on their account. They're a taxpayer into that eToro ecosystem. eToro then decides how to spend that money, but at the same time, they aren't really questioning eToro's marketing spend, or how much eToro management are being paid, for example. So maybe they should.
I think that whole conversation sort of does make you wonder if in our minds as copiers we're exaggerating how much PIs get generally, because it's one thing to talk about how much Jay's getting paid, but there's people at the very top, and then there's very quickly the payments drop, I would have thought, down to quite humble amounts, really.
I mean, I don't think there's going to be very many people in the elite tier who are earning more than $80,000 or something like that. That's probably before tax, even, to be honest. So take that as you will. I think there are clearly a lot of very talented investors in the elite category. Generally, I think that's really the kind of point at which I guess the wisdom of the crowd kind of filters out a lot of the people that aren't quite as good.
Yeah, and there's more to it than just being a good investor, a talented investor. It's a different game, really.
Yeah. You've got marketing and everything else, building up your brand and your profile and communication and doing all of these reports and things. I mean, there's so much work that goes on, I think, behind the scenes that people really don't realize. Even writing posts for eToro, most people that I've spoken to spend at least a day working on those posts, like a full day of just writing it. And before that comes all of the research and things behind it, in a lot of cases, or looking at market commentary and things.
And one final point you made in your quarterly call is that you, in fact, make more money personally from other investments that you have outside of eToro.
Yeah.
So you add that all together, you're not doing too badly, but we shouldn't feel too sorry for you.
That's very true. I want to save up for a solar farm, but that's my goal.
So maybe just before we wrap up, let's talk about one last thing, also to do with kind of connected to the last topic. And something I saw you mentioning recently is how much as a PI you need to have a thick skin. What can other PIs do to avoid letting the responsibility get to them? Because I imagine for a lot of people on eToro, they haven't ever felt responsible in any way for other people's money. And I mean, I'm sure there's a range, But there's got to be a lot of people who feel that very keenly. And it must be very hard when things appear to be going down the toilet. And on top of that, you're getting dogs abuse.
Yeah. Yeah, it's honestly, bear markets for popular investors are, I think, can be really, honestly, quite damaging to their mental health in many ways, because they're getting a pay cut while all of this is going on, presumably, because they'll be losing copiers or losing value in their portfolio, which means their payments from eToro will be going down. They're losing their savings, their own money that they have in that portfolio, which especially at the kind of lower and mid tiers is more likely to be a larger chunk of their finances. They're receiving a lot more abuse from their copiers or followers, or even people that don't follow them at all, but just fancy having a dig. They're probably under some pressure, potentially, from eToro in terms of how they manage the portfolio or how they're managing their risk and making sure that they're, managing it responsibly. It's a lot for someone to deal with. Like, definitely in 2018, I really did feel it. This year, to be honest, I think I'm personally pretty fine with how things are going. I'm actually, I'm not super impressed that I'm slightly below my benchmarks, but I'm feeling pretty happy because that's really what I measure myself against more than anything else. And I think that's what I would encourage other people to do. But that doesn't really change the fact that when you have that much responsibility and there's real people, and especially when you get the people that aren't so much attacking you as kind of showing real concern about their savings or suggesting that, they thought it was safer than this and that they planned on buying a house or whatever it is. Those are the ones that I think kind of eat you up a bit more if you read them. So it's a tough gig for popular investors. I wonder how many have been avoiding your podcast as well, because that's the other thing. On top of all of that, you're still expected to kind of show this face of calm and that everything, telling everyone that it's going to be all right. You're like a counselor for everyone else, even though you're probably the person that needs the counseling the most in many cases.
Yeah, well, so kudos to those who do come on and talk. But I'd be lying if I said I hadn't been let down. So I guess it's understandable, although those weren't the reasons cited, usually. All right, Jay, let's wrap it up there. Thank you very much for being so candid with us on all those various topics.
No problem.
Oh, we didn't even talk about market outlook, but,
yeah,
there's always the third time. We'll get you back after this enormous Michael Burry, Ray Dalio crash. It's going to last for the next 3 quarters.
Century.
And then we'll talk about, once we're all wearing rags and eating rats, we'll discuss a way out of it.
Speaking of rats, never mentioned the dead cat bounce. I thought of a really good alternative. I'm so proud of myself.
Oh, yes. Well, okay, let's do that now. One question I asked Jay in advance of this chat was, given he was so pleased with the fact that the term "there are many ways to skin a cat" had been replaced by the much more genteel and health conscious "there are many ways to eat an orange" on this podcast, that I asked him if he could come up with any alternatives to an expression that we hear all the time, which is really horrific, which is dead cat bounce. And I believe, Jay, you have something to lay on us?
Yeah, I'm fully expecting you to maybe use some of your editorial skills to perfect it. But dead cat bounce is obviously referring to when the market's bouncing while it's falling, essentially, and not to get too excited about it, actually recovering. Even a dead cat still bounces, sort of thing. So I was thinking of going down the lines of a slinky down a staircase still goes up at various points while going down. No matter how you roll a slinky down a staircase. Well, not no matter how. I mean, there's obviously ways, but I think that it's quite a good kind of metaphor of a slinky going down a staircase.
It is going in one direction, but on every step, as the slinky reforms, it grows in height a little bit before then continuing on its downward trajectory.
Yeah, so I think there's something in it, but I'm not sure how to phrase it because I'm not a wordsmith like you.
I'll have to work on it. It's going to be tricky because you want to put it into like 2 or 3 words.
Yeah.
The best I could come up with was a floorless elevator. Which now that I say it doesn't sound very good at all. You know, you think it's going to go up, you step into it and but that doesn't quite have the same upward motion.
No.
There's no upward motion in that.
Yeah.
At least yours has that. And anyway, what is it about these finance people that they hate cats so much?
I know. I own 2 cats and I like them very much. Why do cats... In fact, in society generally, it feels like cats get a very hard time compared to dogs. Do you not think?
I do think that. And I can even see behind you, even though you're in the Copytraders Clubhouse, I can see some sort of a cat climbing frame. Is that what that's called?
Yeah. Yeah, cat tree.
Yeah. Well, cats, they're associated with the devil and all sorts of things, aren't they? Creatures of the night. Not loyal and loving like a dopey dog.
Yeah. And yet cats are the things that we build statues of, not dogs. In terms of like through history. Lots of civilizations idolized cats.
Okay, and on that bombshell, ladies and gentlemen, let's wrap it up. Jay, thank you so much for being with us. You take it easy. Best of luck in the future.
No problem. Thanks a lot, Gavin.
Always a joy to have a chat with Jay. Sorry for the pain I caused him, and most likely you, listener, with that crossword clue. Let's just put that down to the delirium of the coronavirus. I still managed to get an episode out though. What a professional. That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. It's just generic chit chat. We don't know your individual circumstances, etc., and so forth.